Good afternoon, everyone, and welcome to the Legal Advice for Business COVID-19 webinar. I understand there may have been some cancellations out. Those cancellation emails, for anyone that received them, were just cancelling the additional days. As I've said in earlier webinars yesterday and Wednesday, we'll be going back to twice weekly next week as things start to move a little bit slower and the economy slows down. My understanding is that Prime Minister Scott Morrison is currently, as we speak, making an announcement which may involve an announcement in relation to the rent relief package for both commercial and residential tenancies. So I was hoping to have an update for you all on that today, but we don't. So that everyone will know about it beforehand, but we'll cover that in some more detail on next Tuesday. So look, we don't really have any new content today per se, but quite an intimate group. So happy to go for a direct question and answer process for you on anything that we've dealt with throughout the course of the last 4 days. So you'll recall we started on Monday with Commonwealth Government stimulus. On Tuesday, we dealt with the employer-employee relationship. On Wednesday, we dealt with refunds, credit notes, and debt collection processes and debt collection timing. And yesterday we dealt as best we could prior to the announcement with the landlord-tenant relationship. So yeah, please, I'll open the floor to you guys to throw some questions. And look, it may be the case that we wrap up a little bit early today if we get through the questions. Yeah, so that would be great. Perfect. All right. So I think there's a few people here that are waiting for that rent relief answer, and we don't have it yet. Excellent. We've got some questions coming in. Excellent. So we've got a question just wondering about boosting cash flow for employers. So that was one of the measures that we covered on Monday, which I'll just skip to in the slideshow. That was this one here, employer cash flow A and B. For those of you that were registered for PAYG withholding prior to 12 March, then you'll be eligible for up to $50,000 as a credit against your March BAS when that's lodged and payable on the 28th of April. So first of all, it will go as a credit towards that BAS, and then if you had money owing back to, if you still after the credit was applied had money owing back to you, then it would actually come out as a cash refund. That same process, for those of you that are still in a position and are still trading in July, that same process will occur through July, August, September, so that, for example, those $50,000 amounts will be payable over the course of that period as well. Excellent. So we've got another question on that same point. So we've got the $50,000. So that will be based on your March BAS. So say, for example, you have salaries of 120. Well, I'll just share my screen, in fact, with you, and we'll go through a practical example. One moment. So hopefully everyone can see that fact sheet there. But you'll see here that the government is providing up to 100,000, as we said. We know that, okay, there's 50,000 of that available in the April BAS, and there's another 50,000 available July to October. So under the enhanced scheme, this paragraph here, employers will receive 100% of their salary, of their PAYG withholding, up to a maximum of 50,000. So for those of you that withhold, say, for those of you that have a wage bill in excess of probably $120,000-ish per month, you will likely receive your entire 50,000 as a credit against your March BAS on the 28th of April. If you had, now there's a lot of people saying, oh, but is it cashback or is it not? The simple fact is that in theory, most businesses should have their March BAS ready to be paid on the 28th of April. Now, for everyone on the webinar, you'll know that a lot of people are on payment arrangements, then, and there's a lot of delay. So those of you that are able and in a position to always pay your BAS on time, then for you, it will definitely have a cash impact because you already would have had those cash reserves available to you. For those of you that are perpetually behind, maybe you're in the building industry or maybe you're in another industry that is always delayed in collecting receivables, then you're right. I mean, the impact is not going to be as drastic as it otherwise could. The best place for you to have a look, and I won't go through it on the webinar because everybody will have a different, there's many questions, but you'll see here that there's somebody here that has 8 construction workers. She withholds 15,000 per month for those people. She will get a credit of 45,000, being 3 times 300% of her March withholding, and she will receive that on the 28th of April. So she gets 300% on the 28th of April. Then in April, to be remitted in her March BAS, she gets the rest of the amount, being 50,000 less 45,024, leaving her with 4,976. At that point, she's exhausted cash flow boost A up to 50,000. So she receives nothing in May. Then we say, okay, for June, June, July, August, September, she'll receive up to 12,500 or 25% of the boosting cash flow allowance for each PAYG amount withheld during those months. So the second part relies on there being employees of a substantial number throughout July to August. All right, so just go back to Q&A. All right. Does anyone have any other questions on the stimulus or just more broadly in relation to some of the other matters, whether they be employment or other things? I know that this session's a little bit of a free flow session. We probably expected to have a little bit more information on the rental relief than we do at this time. So I'll just hold for a few more questions, and then if anyone doesn't have any other questions, we might wrap up early today and reschedule with a clear program for Tuesday. By Tuesday, we will have a clear indication on the rental. We'll have we probably will start to see some stage 3 lockdowns in Victoria and New South Wales. One would have thought, and for those of you that have been watching earlier in the week, what do stage 3 lockdowns potentially do? Well, they potentially create another wave of stoppages, which give people access to Section 524 of the Fair Work Act, which enable businesses to stand down staff without having to make them redundant and pay notice and redundancy pay, and enable those staff to head off to Centrelink and obtain the job seeker allowance and coronavirus supplement. So each way, I think, what we're hearing now, you can probably see that, as the week's gone on, us and our team have become a little bit more drained because of the amount of the amount of people we're just seeing left, right, and centre fall over. August, September could look like. Definitely what we've seen this week is more bad news than good. I lost my train of thought, but I think where I was going with it was that a lot of our clients particularly are looking for that reprieve now. They're looking to say, give me the shutdown so I can, because I've got no clients anyway. My clients and my customers have pretty much decided that, for example, we're now having some discussions with our childcare clients that are saying, well, you're bleeding us anyway. We've got one or two students here, one or two children here. Why are you keeping us open? So it's not only now a medical thing. I guess what we've observed is that the public is deciding to self-isolate before the stages are hitting, which means that the businesses are hurting quicker than the lockdowns are coming. And then those businesses can't get access to stoppage. The Commonwealth, there's other countries around the world had said, so just got an unstable internet, whereas countries in other places around the world had just sort of called it and said, no, we're stopping right now. I think probably what we've observed here is that Commonwealth government wanted to try and stretch and test the economy as best they could until such time as then, we probably don't give them enough credit that they probably did expect this number of people to be in Centrelink queues. It's just meant that all of the businesses that have been in various stages of limbo in relation to shutdowns and the like this week have had to go through and feel the pain rather than just take a clear direction, stop now, everyone stay inside, and we'll pay you $580 a week, as, for example, they've done in New Zealand. All right, I'll just go to some questions because I'm sure you guys are tired of hearing me waffle on this week. When do I expect to shave again? I don't know. Perhaps never. Perhaps I'll just grow a Forrest Gump beard. So yeah, we'll see how we go. But yeah, certainly looking more and more dishevelled as I hear more and more disappointing stories over the course of the week. But again, also optimistic for August and September because I think that it gives clients a chance to reset. It gives clients a chance to rebuild, chop out any dead wood. There might be an element or a subsidiary of a client's business that is underperforming and should have been isolated off and liquidated some time ago, but people have been hanging on to it because they haven't had the mental capacity to stand back, look at it from an objective perspective and say, we need to draw a line in the sand. We're no longer going to trade that arm of our business, or we're going to close that restaurant and we're going to keep the two good ones over here. So I think that's where we see a lot of proactive work that can be done in the next, and it's just my personal view, but I do think that it is a 3 to 4 month play. I think in that 3 to 4 months, people should be spending their time on, okay, for those of you that aren't hopelessly screaming that there are if you're speaking to an insolvency practitioner sooner rather than later if you know that there's no chance of a bounce back. But for those of you that have got some money for a bounce back and feel that a bounce back is on the cards, then the way I'd be spending my winter, and the way we in fact will be spending our winter, is to go back, say, okay, what do we want our business in August, September? What things were frustrating us behind the scenes that we couldn't get right? If you're a restaurant, it might be your menu, and your supplier costs. Law firm, it might be our precedents and our digital content. And I could go on and on, but it's a time to basically redesign your business. If you've got the cash to do it over winter, treat yourself a little bit like a startup. and have a cleansing and proactive process so you're ready to go. For some of you, that will just literally be operational things. For others of you, that will be more heavy duty. And that may mean going in, speaking to your accountant, your lawyer, and your insolvency practitioners to say, okay, my debts are insurmountable, and I need to restructure this business in a lawful manner so that I can basically cleanse the problems that were there prior to March 2020, and basically come out the other side of it a stronger, leaner, meaner business. That was a long answer for someone asking me when I was going to shave. The other thing we're going to do next week is get some people other than me on here so that you can actually have some people of interest who are probably more clean shaven. Okay, so we've got a question here. FY19 corporate tax, do we have to submit the tax return on time but can defer payment for 4 months? Let me take that question on notice. I haven't sort of gone to the corporate tax return side of the equation. I've only really got as far as, so if I just share the slideshow again, I've only gone as far as sort of these items here. So the instant asset write-off, which to be honest, the amount of leases we've had clients pull out of in the last five days is absolutely phenomenal. So in my pool of clients, I don't have I don't have anyone that's really clapping their hands together over the instant asset write-off. Perhaps those that had done a fit out back in October or November might think it's fantastic, but I certainly haven't seen it encourage a spending burst between 12 March and now. We obviously then spent time on the BAS, the PAYG credits that come out in April and then in June, July. And then we really haven't seen a lot of uptake for people that are going out to grab the underwritten 250 grand loans, although my banker has certainly been chasing me, and we know that other clients have been chased as well. I think the general sentiment from the discussions we've been having is, well, perhaps more debt with personal liability exposure on it is not the kind of stimulus that people are expecting in the climate. And yet, political opinions aside, I can certainly understand why people would be hesitant to take on more personal exposure until they know where they're headed. But I will check that income tax return, or if there are any accountants on this afternoon, please don't hesitate to jump in with that answer. Just to repeat the question, do we have to submit corporate tax return on time, and can we defer the payment for 4 months? And is that payment interest-free? Okay, so we've got another question. If the government shuts a company down, what is the company's obligation to staff with regards to wages? Okay, so that's an excellent question. And for those of you that have been on anything earlier any of the webinars earlier in the week, that's one that we spent a fair bit of time on Tuesday. So basically, if you're a directly impacted shutdown business, the most common example is a gym or a massage parlour. If you're one of those businesses, then you would consider that you've had a stoppage. We would consider that you'd had a stoppage. And for the purposes of Section 524 of the Fair Work Act, that enables you to stand down employees for an indefinite until the stoppage passes, and it enables their leave to accrue. You aren't required to pay them out as you would with a redundancy. And then on the other side of the stoppage, you can redeploy those persons. The good thing for them in that people in that camp that their team get access directly to the job seeker allowance and the coronavirus supplement. Unfortunately for so you've got three camps, right? The direct case, i.e. the gym. You've got the fringe, you've got the fringe or grey area concept, for example, a fast food restaurant. So you've got no dining permitted, but you've still got a takeaway operation. That's a much harder test, and really we have to apply it on a case-by-case basis, because is there a potential viable business to be had? And if there is the argument that you've got a stoppage as to part of your workforce but not the other part. So that's a more difficult analysis that we've done many times this week. You've then got, so you've got four camps. The next camp is the camp that's a downstream industry. So for example, we've had some people that have stores and retail in airports this week. Domestic travel is completely banned. Are we a stoppage? Now, one would argue that if you were just in Westfield and retail is slowed, that is not a stoppage, because there is such a direct path between people boarding and deboarding aircraft and walking past a retail store. Then it could be said that no, well, that is a stoppage, and Section 524 of the Fair Work Act applies. Then on the other side of the coin, you've got professional services, for example, like us, that are nowhere near a government stoppage. Most of us can work remotely. Sure, everyone's seen a massive economic downturn, but for the purposes of sending our teams to Centrelink to access JobSeeker and coronavirus, there's only one avenue through which to do that, and that is through a redundancy. Now, with a redundancy comes notice periods and or redundancy pay, depending on how long the person has been engaged. So it can become quite an expensive and non-strategic avenue, particularly if you've got staff who are in a wage bracket of sort of 80,000 or less, because you're sitting here making a decision saying, well, I don't have enough money to pay that team member. However, I don't have enough money to pay that team member their entire salary. Now, if you were to just make them redundant and send them on their way, you at least open the channel that they have access to JobSeeker at a net figure of somewhere between 40 and 45,000, and early super access. Whereas if you just basically leave them there on the payroll or part payroll, both the business and the person bleed. So whilst I completely understand the government's rationale for this staged approach and keeping the economy open for as long as possible, you get to a scenario that there are certain businesses left here at week 2 that are sitting around going, really got nothing to do, really wasting time here for everyone, but can't create a stoppage, can't lawfully create a stoppage situation. So it's frustrating. All right, so we've got another couple of questions here. Do we know about super? Yes, so you'll see here that back on the individual, I think the screen is still sharing. Yes, it is. Geez, now I'm very self-conscious about that beard after the last comment. You'll see here that for those that have been had a reduction in their hours of 20% or more. So most common example, someone's gone from 5 days a week to 4, that they will have access to 10,000 in super this side of the financial year and 10,000 in super the next side of the financial year. So where's that relevant? What context are we hearing that in? We're hearing that in the context of people that aren't in a position to access a stoppage and therefore aren't in a position to send all their team members to Centrelink on JobSeeker. So they're coming up with some other kind of strategy to keep money in the hands of their team without making their team redundant, but then sort of suggesting that, well, if the figure they can afford to pay their team is not enough to sustain their team through winter, then perhaps the team members are going and making a drawing on super as well. Sorry, the question's been clarified. Do we need to pay super for our employees during this time? I've not seen anything on it, but my first blush, and I don't think there's, and please someone correct me if I'm wrong, but I certainly don't think there's any indication that those of your team members that remain engaged, because bear in mind, super in theory is a flexible cost. It's not a fixed cost. Well, it's not a fixed cost once you determine what you're doing with your full-time workforce. So really, you should have, by this stage in the week, if you are in one of those directly impacted industries, you should have already made a call or be very close to making a call on what you're doing with your fixed labour cost. And in that regard, you should then therefore know what labour cost you've got left, and therefore you add 9.25% to that to add your super bill. There would be no indication. I would almost completely say, yeah, I'd absolutely be shocked if they said for those people that continue to engage a workforce, that for some reason that 9.25% is chopped off. That 9.25 is, and that's where it's really quite frustrating, where we, as lawyers and accountants and a couple of insolvency practitioners on the webinar, see companies go into liquidation owing buckets of super and buckets of PAYG, and even buckets of GST. That kind of money, and I think that's probably a really important comment for businesses to kind of understand going out the other side. Try and keep those amounts of, and I know it's easy to sit here and say, but try and keep those monies out of your working capital as best as possible. Income tax is probably the only one that the good accountants and financial advisors that I work with let people sneak back into their working capital, because GST, you're basically holding on trust for someone else. PAYG, you're basically holding on trust for someone else. And superannuation, you're basically holding on trust for someone else. So I know it's easy for me to say here, and I know it's easy to use taxes as a free or cheap funding mechanism, but it is fundamentally the thing that gets people caught out more often than not. Comments suggest to all that they keep lobbying government to continue to release tenders. We've seen a few delayed that would trigger a lot of work without any government expenditure. I completely agree with that comment. So I think you'll probably inevitably, given that people's attention is focused elsewhere, I agree with you. You would hope that they would continue tenders. I think that the practical reality is that they simply won't. They simply will have their attention diverted elsewhere. They'll be in a situation where there's been multiple hundreds of billions of dollars spent on stimulus, and it's an entirely changing landscape. So I think I agree with your comment. It'd be nice to see government jobs still rolling so the economy can keep going. But unfortunately, I feel that what gets spent when, that dynamic will change, and we really won't know it until much later in the year. All right. So sorry, I'm trying not to make this too much of just, look, this webinar has probably been our most scattered of the week, purely and simply because we thought we'd know some more on rental by now, and we don't. So unless there's any other questions, we might wrap up sort of 10 minutes early today. If anyone wants to drop out, they're welcome to, and some others can stay and ask questions, whatever everyone prefers. And again, we're more than happy to take some take some specific questions offline as well, if you prefer. But after today, we'll get a lot more structure back into it for Tuesday. We'll get some third parties on board. So just to recap, Tuesdays and Fridays going forward and into April. So we've got a couple of questions here. Excellent. No, our pleasure. Thank you. Thank you for joining, and apologies today has been a little bit off the cuff. All right, I'll just stay on board for another 5 minutes, and if there's anyone that has any questions, please feel free to ask. Just while everyone's wrapping up, I'll just be rude and jump on my phone to see if we have had an announcement on rent, because I'd be quite interested to see what's going to happen there. I think so we've had an announcement at 2:40 that there's a third stimulus package to come. The third stimulus package will be revealed in the next few days in a move to hibernate Australian business and help them through the lockdown. Prime Minister Scott Morrison said that there were businesses that have been forced to close their doors and he wanted them to start again following the coronavirus pandemic. And I guess that's probably the sentiment that I touched on earlier, which is I've sort of turned my mind to, and I hope many of you have, starting to turn your mind to a redesign and a re-engaging phase. Treasurer and I will have more to say about that in the next few days as we're preparing to put in place a third tranche of measures. We're doing everything we can to ensure we maintain as much of that economy as we can through the crisis. Okay, this will include support from states and territories on the issue of commercial and residential tenancies. So if we follow a theme, I don't know what day in the week the 12th of March was. The 12th of March was a 12th of March was a Thursday. There's no theme. The 12th of March was a Thursday. The 22nd of March was a Sunday. I'd be suggesting that hopefully by Monday, Tuesday, we're seeing, hopefully by Monday, Tuesday, we're start. And look, to be honest, from my point of view, the third part of the stimulus doesn't even really need to come yet. It just, we can almost go to part 2B of the stimulus, which is a shutdown for and I don't know why I'm giving you so much opinion, but I almost think we need to go to part 2B of the stimulus, which is okay, let's shut people down so they're not running around in this frantic panic trying to get advice as to whether they're in a stoppage or not. Let's give everyone, landlords and tenants, a clear direction on rent. Let's basically let the medical part of the equation take its course over whatever period the experts recommend. And then I'd be, from a personal point of view, I'd be happy for them to sit on part 3 of the stimulus for 4 weeks until they basically get it right. Because part 3 of the stimulus, in my mind, it's not about April, it's about July, August, September and onwards. So I hope, I'm sure they're not, I'm sure they're well advised, but I hope they're not rushing part 3 of the stimulus. I'd prefer to see it in 2 chunks. Part 2B that deals with rent and further stoppages, and part 3 that really is that come alive post-hibernation spring concept. Perfect. So I've had a thank you. Thank you very much. Thank you for bearing with us this week. We've enjoyed speaking to you. We've certainly drained the tanks here from an energy perspective, and yeah, we wish you all the best, and we hope that you can start to turn your mind to the spring and to the re-engagement. We've got another question. The question is, why would a company use redundancy instead of a downturn in business for employees? Okay, so really good question, and it's questions that we've been grappling with all week. Those that have access to the stoppage provisions, who are in a direct or a very close to direct line of sight to the government ordered lockdown, use a stoppage to get access to stand down provisions in the Fair Work Act, which means that their wage bill immediately disappears and their team's expenses are covered by job seeker and coronavirus supplement. So you've got a clear remedy, a clear path of remedy for both the business to stop the expense and the employee to pay their groceries. Great, that puts us on a level playing field with places like New Zealand and other parts of the world. Where people have to use a redundancy, and that's why I did say, I hate to say I told you so, but I did businesses on Tuesday. If you can hold, don't make knee-jerk reactions, because we may see another stage 3 stoppage come by next week, and it looks like we will. So situation, potentially people could avoid using redundancy. I think people would only use redundancy if they're in those really if not even a downstream industry. If they're sitting over on this side in a professional services capacity, or they're sitting over here in a manufacturing capacity, they're not looking to get us shut down at any point in the future, then they would say to themselves, well, look, I've got to make a call here. I've got to get this wage bill down because we're bleeding. And that's what they would use. Hope that answers the question. I've just got one more. Excellent. All right. Well, I think we're at 3:10. So we might call that a week, a pretty full-on week, but a week nonetheless. As I said, from Tuesday, I would hope that we would know what I'd like to be part 2B of the stimulus, which is rent relief, and really what I'd love to see is rent relief answered. And I'd love to, even if he's saying that the medicos are saying that you don't need to shut it all down at once, I'd love to see, okay, we're expecting it to go in these waves. Because even from our perspective, if you knew that all businesses except supermarkets would be stopped by Easter, then at least people could. But with these sort of in the middle of the night announcements, people have gone absolutely frantic in our client pool this week, and it's probably not the best way to tackle it. But unfortunately, cash is king, and they could just foresee that they weren't going to have the money to pay wage bills. Anyway, I will leave that with you. Thank you all so much for your week. Please stay strong. And again, if your bank account allows it, now's the time to have a weekend off, or even get a little bit of a clear head until over the next week or so. But then after that, everyone needs to be on a restart, reignition bandwagon once the shackles come off. I have no idea when that would be. If you guys know, then I'm sure no one's that much the wiser, but we're certainly not expecting it until August, September. All right, thank you very much. We will speak to you all on Tuesday. Have a wonderful weekend and get some rest and some family time and some exercise. Cheers.